Alright, good afternoon. Let's do an update review for today. Today is Tuesday, September 5th, 2023. Is a first trading day of this week, and we have the Monday is the holiday. So let's take a look at the calendar news for today, for this week. Right, this week we will have a PMI, but I think next week we will have a CPI with consumer index is a high impact news. So this week we don't have any high impact news. And let's see what is the SPY doing today. So it dropped, $1.19. It's about 44%. All right, that's you look at the chart. Let's look at the chart. We can see it is the 1 minute chart, but let's look at the 5 minute chart. So here's the hold on, I think let's look at the the 1 hour just one-hour chart, but let's turn off the label so we curve. Okay, so on the 1 hour chart, you see the short setup layout, right? You have a bearish breaker and you have the fair value gap right here, or implied fair value gap, and you see the retest right there, and boom, it's gone down. However, you have a long setup right here, is the bullish breaker and the fair value gap, but for today the price move and break that that's bullish breaker right there. And if we look at the 4-hour time frame, so the only thing we're looking for to see if the long setup still there. So far we see the short setup is play out right there, so we want to see where the short setup gonna end, then we can go long, right? So look here, a 4-hour time frame. So we see right here a bullish order block and the fair value gap. So basically it retests this one. So the long setup for the 4-hour time frame is still on right there. But if tomorrow it break out this order block, then we know that it may go down and fill this huge gap, implied fair value gap right here, or at least it's gonna be if it break down, it's gonna take this sell liquidity right here, and it's gonna retest the bullish breaker. So that's two target that it may go down right there. So tomorrow we can go short if this is the case. Okay, let's mark this right here. So 449 right now, 448 is a dollar. Okay, so what's the low of this one? 448.33. Yeah, 33. Let's fix this 33. So it's a swing low, so it's a sell liquidity, right? Buyer swing low. It's on the right here. Yep. And we have another one right here. It's bullet breaker right there, and we have a heel gap right here. It implies fail gap right there. So let's see. And today we see that the Monday, the first candle is open. It's open down close, open up and high, right? Yeah, so look at the 1 hour. Yeah, I think the next target to go down is right here, and it may continue to break down. The reason why, because look at the the 5-minute time frame, we can see why it signal a bearish trend is forming. So basically you see the Friday, right, is a breaker. I mean the bearish blocker, a bearish order, and followed up, boom, retest, boom, down. And this is a so for consolidation right here. And you see the move that we mark right here is from the open, and then is the London low, which is the Asia high and London low right there. So right now basically it's still in this range. You see it never take out, even today it never take out this high. So it's still the range and it never take out, it just retested low but never take out a sell side liquid from here. So the buy side is still there and sell side, it trapped both side right there. So as soon as we see one of the liquidity was taken out, then we can engage right there. And also another bearish signal is that it opened right here this week. It opened below the close of, you know, prior week close right there. That's the bearish signal. And today we have a very nice setup right here. If we can see that, so right here you have auto block and you have a big gap right here, and boom, it take the buy side liquidity, and then it went down, it make another leg down right here, right, which is a retest right here at 10.15, and another retest. Wow, you see that in the aftermarket it take out a sell side liquidity now. Let's see. Wow, so basically it did not take out a buy side liquidity here, but it keeps take sell liquidity, so it's a bearish right there. So it's retest in this auto block color time 1 2 3 4 5 6 times right there. So if we can go long right here, then with our target gonna be the buy side liquidity right here, and exactly it hit right there 104 right there. That's the setup that we can take advantage. And let's see what is the risk reward ratio first. Okay, so we got $1.71. And how much we reach? I think very low risk for us right here. $2. So no, I mean we reached 25 cents. 25 cents, and we gain $1.71. So more than, I think, 1 to 5, right? 1 to 5 or 1 to 6 risk reward ratio right there. because 25 you times 4 is $1. You times 5, which is 125. Yeah, almost 1 to 6 ratio right there for a very good trade. And it's also coincident with the DR model. You see the DR model right there. So it failed to break through the DR impliedly low, and you see the short setup right here is played now, right? You have short setup right here, the bearish blocker, and boom, displacement fell up and retest, boom, it gone down, and then it's another leg down retest, and it hit into the bullish breaker, I mean the bullish order block right here. Then you know that it's safe to go in right there. Yeah, let's take this. Let's take this node. Lock the trade out journal right here. Right here we do only, right? So basically want to show ratio, and the go in is perfect. So it's very, I mean, on my previous experience, I will take a short right here, but now my now is our reading the liquidity improves, so we know right here is a bear trap. Whoever go in here and short will get, you know, wiped out, because it is just a manipulation right here. It's a retest, because have a bullish order block right here. It's just a retest, and it's not gonna go down because right here a retest already. It's just a retest. It's not gonna break down. It will be breakdown if you see the buy side liquidity was taken, and you see, in fact, it take out right here, and then it moves, it break down, it take the buy side of it, sell side of it right there. So basically we believe this is a buy side liquidity trap, so we're not gonna break down, it's gonna go up. That's the whole idea right there. Anyway, let's take the screenshot of this one. So yeah, let's take a screenshot of this one first, and then I can show another setup we may take, right? So right here we will have a okay, hold on, I think I want to do something real quick. Okay, I want to move it a little bit out of the way. Okay, okay, so now let's do the screenshot again, because I don't want to crowd it in this area, because I'm gonna put a note in there. So hold on, you need to put a timestamp right here at this place. So basically we have right here, we have an order block and fair value gap and retest. And we have a long setup, right? What do we have? Yeah, we do have the, in order to engage long. Before that, we do have cell liquidity was taken right here, right? Cell solution, and we also have the bicellularity was trapped right there. So we have it make our rule of engagement right there. When we try to engage long, we make sure that the before that it have before the retest happen, we make sure that it do have the liquidity cell liquidity was taken, and then before that we see that we have a bicellularity was trapped. That's an idea. And in this case we have the DR model confluent, right? That's the good thing right there. And the entry time for is 10:35. Yep. And our target is the bicellularity up there, right here, the bicellular up here. Yep. So this trade is very good risk reward. It's 1 to 6 reward right there. Very low risk right there. Man. Yeah, extremely low risk. The more we practice, the more confident we have, and we have no problem to go in here. When we first started, it looked scary to go in here, right? Because you thought, wow, it's gonna break down, right? It's a huge, big dark low candle, but it's not. It's just a manipulation move right there, because it's trapped all the buy side liquidity right there. So it's not gonna go down. It's gonna go up and grab that all buy side liquidity or trap right there. And the reason that because it leaves you the mark right here is the auto block, the bullet auto block right here and the gap right here. So it's gonna go back and retest it in order to go up and grab all the buy side liquidity right there. So the experience we have through observe give us the confidence that we can take the long at this moment, especially at around 10:30 or 10, around 10:30. In this case, exactly 10:35. Hello. Yep. All right. So we check that screenshot. Okay, one more thing about that long setup is that it go, and you see the London right here. I think I just highlight this. Is the London section right there. So it coincides with London low, so it retest London low right, so it's a perfect entry for long right there. So that's another thing I want to point out. Yep, see that? Okay, so the second trade is this. You can see that the second trade right here, you have an auto block and you have displacement and a retest on this auto block. So you can go in, and however right here you have to get out when it hit this auto block. You got to get out, otherwise it go back. You see right here, it go back and it we're gonna stop you out if you put the stop loss too tight. However, if you mix this entry, you can still entry here and give your stop loss high enough for it to stay in the trade right there. Or if you look at this level, you can see this is the bullish, the bearish order block right here. You see that huge displacement and retest right here, and then boom, it's going down. So yeah. If you look at the 1 hour time frame, you can see that short setup, it fit into a bearish breaker favorable gap retest. Let's look at the 1 hour time frame. Okay, let me write down the risk reward ratio for the previous trade is 2.25 cents and $1.71. I want to remove it. Okay, now look at this, right? When you see this go up, you can treat this or this one at a you can treat this one, this level right here, at a bearish breaker. Okay, it's a swing low, right? So it's a bearish breaker, or in another word, is another term is bearish breaker is ICC term, but other retail language they will call that the resistance, right? The support turn into a resistance level right there. Yeah, so this is just a retest right there. So we can take a short setup when it show up right here. You see, go up, the retest, and then boom, go down, boom, go down. So we can see that it's a bearish, very bearish right there. Yeah, you see, so whenever it goes to this error, we can short them. So that's the setup that we can use right there. The perfect alignment with on the 5 minutes and 1 hour time frame right there. So hold on, but this one really above here. So how many cents? Okay, I want to see on a 1 hour time frame how deep it did into this. Let's say normally we put 5 cents above, right? Above a stop loss, 5 cents above a anticipate, retest error. So this one is over 15.99. So 15.99. Very tiny. Basically, it's below the previous week, prior week close. So 15.99. So for sure, we can put our stop loss, above the prior week close. We're good to go around. But I want to see what is this candle high right here. Okay, so this candle high is 06, so 99.06. Hold on. High 51.06. Oh, 51. Okay, so 99.06, so 7 cents above that. Okay, so our okay, I see. Okay, so the idea that if we want, we can put our stop loss just above just right around of the private close, so it's 20 cents right there if we want that. Yep. So basically we stop loss right there and look at our target. Our target gonna be the right here, the sell side liquidity, but it will not read it after the market. But you see it's how accurate it is. It takes the sell side, basically it track all the sell side liquidity right here until after the market it go in and take all of them. So it matches all that order, right? That order, the buy order with the sell right there. Well, if we are accurate, then we can see, we just put right here, or at least we just put right here in the middle of the order block. That will be very high, you know, properly target in right there. Instead we go all the way down, check the buy side liquidity. Then we reach, yeah, oh man, $1.71. How coincident is that? Same like previous trade right there. Because we know on Monday, right? Monday is more, normally Monday is a range day. Normally, I mean 80%. The other 20% it would move differently. I think on the right side. Yeah, I think on the right side. Anyway, so we want how much we reach, but let's say that we're not gonna time accurately exactly when it hit 50.99. Let go that we allow the flux, the volatile to play out, right? As long as it go to this bearish breaker, we will take it. Yeah, allow it to go above there. So let's say we reach 35 cents right there, right? That's a legitimate reach right there. And if you look at the 1 hour time frame and you see that, okay, whenever it retests this bullish bearish breaker, then I'm going to take a short. Okay, and where we're going to enter is the tricky right here. So basically, yeah, the perfect entry is right here, but we need to hold. Not really the perfect entry right here at 11.05. But when we check the entry right here, we go again the DR model, right? Because the DR model say, but in this case, in the Monday, so we expect a swing both ends, so it could be right here and rejection, and it's go down. So let's see, we see rejection right here, and then we go down. Let's say we conservatively we go on this time. 11.10 right there. Okay, then let's check screenshot of this right. So basically we are project the 1 hour time frame set up on the 5 minutes, and the 5 minutes also basically on the 1 hour time frame we have the setup. We have a order block, not order block, I think bearish breaker, fair value gap, and a retest. Okay, and it's a short setup. Okay, this is for 1 hour time frame. On our 5 minute time frame, it could be a order block. We can see that this order block right here, or the order all the way over there, right, all the way over here. Let's see. Okay, hold on. Let's see if we can include this order block here. No, we can. Yeah, we can. This order block right there, and we try to enter right here. and our target is this retest of this order block. Yeah. So basically we have order block, retest. Let's do 5 minutes first. Okay. Source setup. And what do we have? When we short, we want to see the buy seller really will take it. It is taken right here. You see that it's taken right here. We see that the buy seller will take it. We want to see that, and then we want the sell seller query will drop. Yeah, we have a sell seller right here. You see, oh. Yeah, we see the sell seller query right here, drop right there. So we have it make our rule of engagement right there when we want to go short. So what basically we have a buy seller rated will rated. In this case, it will rated. I see it rated. It not gonna. It's a grab the query and went down. And you have sell seller query will trap right there. And our entry time is 10. And because Monday, so we don't expect that it's gonna break out and go up. But anyway, we saw this up and we take it. I mean, because we decide based on risk reward, right? The risk is very good right here, low risk, and reward 35 cents risk for $1, so just risk it, even though it's 50-50. But in this case, more than 50, right? You have another factor is the bearish breaker and paragraph retest on X1 on 1 hour time frame. So it gives you the confluence right there. And our target is the retest of the bullish order block, which is switch one right here. So basically we have two trades today, two beautiful trades today, right? The long right here, and then we get out right here, and then we get back in here for the short. And we know that, you know, for Monday to swing around 9:30 open right there. But in today it feels like the first candle is down close, and whenever it go above that it gets short. So it looked like a bearish Monday, and which just mean a bearish very quick right there. But we don't know, it may be a trap right here before it break out. But for historical data or seasonal tendency that says, you know, we will look at that data that September is the month of bearish. That's what they say, but when we look at the statistics, it's like 48%, so okay, 50% right there. Okay, so target, so we can put yeah. Okay, so we reached the target at this time. Let's take range of 55. At 1555, right? Because let's say we want to close the trade, we don't want to leave the trade targets hit at 1555 right there, and we have reached reward, reached 35 cents and reached $1.70. So you are 1 to 4, right? About 1 to 4 reach reward ratio right there. All right, so basically we have two beautiful trade right there, and let's see how it's play out for tomorrow. We run out of time now, so thank you for your time and your interest. Talk to you later. Bye for now.